All trading videos by OFA are for educational purposes only, to illustrate sample use cases of the software functionality, not to present a performance track record or hypothetical results. Trading involves substantial risk. Please do not purchase or subscribe to OFA services without carefully reading the complete required disclaimers and terms and conditions located on the OFA website. Welcome to Section 6. This is where we begin to move you through the initial learning process into the early stages of mastery study. We're going to look at the process I went through in real time during the trading day we've been reviewing in the last 5 lessons. This includes the pre-analysis or thought process I was considering prior to the trading opportunity, as well as my actions and comments during the key moments we've been studying. The interesting thing about trying to engage the market in real time, even if you're simply testing your skills paper trading, is that you do not have the opportunity to stop the market, to pause it, and think things through. You can't always come up with the perfect stop or target like you might after slowly reviewing the market after the fact. In short, you get to see and experience the imperfections of trading, and where some of the things might have been done just a little bit better. Let's get into it. Before we get directly into the trade and the pre-market analysis that I want you to see from this trading day, it's important that I give you a little bit of perspective. Up until this point, we've been looking at everything in a 1-minute chart. And the reason we've been doing that is because for most of you, that is going to be something that's very familiar to you. Time-based charts, minutes, 5 minutes, hourly, weekly, monthly, whatever it may be. In OFA, you can certainly use 1-minute charts like we have here, and I think we've done a pretty good job illustrating how all of this came together. But we also have another chart time frame that's custom to OFA. We call it probes and rotations. I'm going to flip over to a probe and rotation chart of this exact same activity. This is a PNR chart, and you can see the entry and the exit just as we have it on this chart. In addition, you can also see that here we've traded up to whatever it is, 47.07-ish, and the prior high that came in and the prior low that came in around 4 o'clock in the morning. When I flip back over, you can see here around 4 o'clock in the morning is that same low moving up into the 47s, then coming down and making the low and retesting several times over before the trade transition and the move all the way up. I'm showing you this because I don't want you to think that there's some sort of bait and switch going on. I want you to see that the chart I use in this example trade is actually the identical day, just in a different time frame. Once you start to see the market through the probe and rotation chart, you're going to see how much simpler all of the transitions appear. Even just at a still image of this chart, look at how much cleaner all of the moves in the market appear than to the hundreds of minutes that are covered here with lots of back and forth and overlap. So all of this data comprised in these 1-minute intervals is going to be shown to you here when we start looking at the real-time chart recording in this next section. Good morning, everyone. It is Thursday, August 25th, looking at the October crude oil chart, about 7:45 in the morning. So just going to start by breaking down a few things. Looking at yesterday's activity here, we have the range of the prior day, which we did in our pre-market yesterday. You can see we traded right down to that range low, then lifted, traded through, and then created a bit of a range on top of that, which in the afternoon and throughout this morning has been holding as a low. So even though we have a lower low from yesterday, we've made pretty significant bounces off of the same low around 65. This up here is marked in red because the actual volume of this transition is a bit messy. So this is something that we might use as a target or as a reference point, but probably not willing to trade directly off of it. We have a nice move down that then popped back up. My guess is that we came back up into a volume weighted average price. We can just test that theory real quick. Oh,
VWAP was significantly lower. So maybe that's a move from the prior high, and I have the profile right on it. So there we go. No, not even lining up there. So not a significant pullback there in terms of volume weighted average price, but it does look like here are the 930 lows that were put in, where we started to turn back up, and then we traded down through them, retested, and that looks like where we came back up to. Anyway, point is that seems to be what's been holding. So what I want to do is go in and just take a look at where things traded yesterday, and get some sense of what we might be looking for on our trades today. So here is the high that was put in at 8:30. I'm going to say that that's going to be probably more significant than a lot of the other things. Also at 9:30, when we broke down, here's the transition down, and here is the pullback into it that probably created all of the highs that we've been up against. So I just want to go in and mark these off so I can get some reference points here. Okay, so that high that came in, the volume was significantly lower. You can see where we retested that. So that looks to be pretty significant. I'm going to mark that. It's a good, clean, normal distribution as well. So that's going to be important. Here is the move down and the retest that comes in right here, where we're finally breaking, and so I want to mark that off. Let's grab that. That happens about 9:30 in the morning, and again, the volume's not where you would expect it to be. You'd expect it to be on the outer edge, but look what happened. It's down lower here, and that's what we trade into and can't penetrate, and this was a little before 10 o'clock. Right. So with that, we come back up. We make this high here at 12:30. That's held, and then it looks as though we penetrated a little bit here in the London session. We've got London lows that came in. Now remember, this blue line is from 2 days ago, so we want to go in and also look at and see what yesterday's lows produced. And obviously there's a retest there. You can see that this morning we came down and retested the same low. Now we actually put in a little bit lower low, and that's been happening. We haven't really been holding transitions in these kind of August days here. I'm going to mark this one off as well. We've been actually trading a little bit outside of them, like this was. So that's pretty interesting. Not a lot from London, right? London puts in a low here, it gets retested, then it breaks down, and that looks like where we came back to, right? So think of it this way. Buyers stop the downward action here, come back, they do it at the exact same place. So we get volume all across here. This is what they have to trade down through, so they break down, pull back up, sellers come in, buyers are trying to stop the downward action, sellers shoot down through, and then again. So right here is the key transition to get through all of this volume. All right, so I'm just going to spread this out a little bit. So if we look at the volume right here, that'll give us a pretty good map of what happens the next time around. There it is. So here's the transition down. This is the volume of the sellers breaking down. I guess we can include this one. There we go. Be a little bit better picture here. And this is the move back up. Again, getting penetrated. Not by much, just by a tick or two, but nothing seems to really be holding right where you would expect it. The other thing I want to check is on this move down, is this significant? Is it a volume weighted average price, something like that? User error there. Okay, nope, it's up through the VWAP. This was also 7:30, so keep in mind at 7:30 we have, this morning we had core durable goods, we had unemployment claims, durable good orders as well. And so it could just be that this was report. I bet if we look at that, it's pretty thin. Let's take a look. All right, so see all the zeros all the way up. and then there's finally a little bit of volume here. So this was right at the report, 732. So it went a little bit further than expected. I don't think we'll count it all the way out. So close this up. Anyway, so it looks like the range that was created here, retested here, and we seem to be trading below it for the time being. So we've got this transition on the bottom, which obviously has been retested here. So it's nice to at least see something hold. So there's the retest. I imagine this one just got retested as well. All the way through it by about a tick. And then this looks to be what's holding currently. So we'll just pop that one on as well. And that seems to be what we're holding up against right now. So pretty interesting. What I'm going to do is move this blue line down to the volume low here. That'll give us a reference of where the lowest volume on the chart is. I'm not overly worried about that. What I would like to do is pull up my, there we go, get a line on this one right there. I want to see what's the spread, because I know I've got a couple of, I know I've got some other lines up above. So that's pretty significant, right? That's about 55 ticks up. So a nice good spread. Let's take a look at where we are with a profile just from the session, since we're basically in a range. And there is our decent distribution. So we've tapped the outside edges of the distribution. I don't think there's a lot to be gleaned from it, but it's kind of the same type of setup that we've been looking at the last couple of days, where really doesn't look like much of anything is going to be moving in the morning. So we'll just have to sit and wait, and could be that that doesn't happen until 10 o'clock again. So we'll just hang out and see. But what I would like to see out of the market is either a move through here, up and across. And in order for that to happen, we're probably going to have to shift the point of control. So once the point of control moves down, if we keep trading at some of these levels here, maybe in the next 35 minutes, we'll see a shift in the point of control and maybe a move up to the high that came in right around, looks like around 4:30 this morning. To the downside, there's not much opportunity here. We would need to break down through the low and create new lows moving lower. And obviously over the last couple of days, that's what we've been doing. We've been moving lower. So that's what I see for the time being. I think I'll try and hunt down some potential moves to the downside where we might be trading down to, since we seem to be creeping lower, and just get some other numbers on the board. But I think that's a good place to start. And I'm just going to pause the recording, because it could be 10 minutes, it could be 2 hours before we see anything worth trading. So looking for either that move up to the top or down through the bottom. So as I was mentioning in the pre-market analysis, and technically it's 8:06, so equities haven't opened yet, but we did get the point of control shift that I was talking about. So if you remember, the point of control was up here, and now it's down here. So think about it in terms of when you're in a range. When you're in a range, the most important price is always going to be the point of control. And now that we have it down on the low side, it gives us opportunity to trade to the top. It also gives us opportunity if we were to move to the top and find a short back into the point of control. It limits the ability for us to want to be buyers off of the low. The reason being that there is going to be a small spread between where the market is likely to trade back to, which is 60. So just think about it in very simple terms. If you can trade from 60 to 90 or 47 even, you're talking about 40 or 50 ticks of opportunity. If you were to trade from 60 down to 45, you're talking about 15 ticks, right? Or from 45 back up to 60, 15 ticks. So it's not that you're going to capture all of that. It's just simply that you have more roadblocks in your way to get good, to get positioned for a good return on the risk that you're going to place for the trade. So I don't know if we'll have an opportunity. As I said earlier, it's very, very slow going, but at least now there is some opportunity to the upside, whereas before with the point of control up there, we might have had an opportunity to trade up to it, but given the fact that we were coming up on the 8 o'clock hour, I assumed it was going to shift, and it has. So in this particular instance, I'm really not interested in what's going on with this blue line, which is the CWAP or the volume weighted average price. The VWAP can be useful when we're in a range like this, because if we were to start breaking down, we would find some use for it, particularly if we had more or less stayed below it. But I'm more concerned about the point of control when we're in a range. And that's always going to be more important to me in a range, whereas if we're in a swing, the VWAP is going to be more important. Okay, we are about 4 or 5 minutes now into the equity session, and we've just been creating this range down at the low. Thought we were going to get out of the top of this, but it was right at the equity open, and as soon as the equities opened, we dropped right back in. So just a timing issue more than anything else. We'll see if maybe we can get back up out of this, or if we actually have a nice breakdown. We do have a nice clean move down to 55 from 75, so maybe there will be some downside pressure. But again, I just don't have anything to do down here because of the location of the point of control, unless we're going to break the lows and make new lows. So if that's the case, what we want to do is get something on there that we can start monitoring and watch this potentially break down. But I think we're going to end up more trading off of this low and coming back up. And at least the upside is that if that happens, we've got good opportunity to the upside. Certainly looking like a little transition. Going to bring this over and just see. Look at this, how nice that looks. We want to get ready on that. If we're lifting back up above the point of control, there might be enough justification there to go long from down here, and then we can start shooting easier targets. So we'll look. There we go. All right. I'm putting the long order in there. Let's see if we can get it picked up at 60. I have to get a down tick here. Putting it right on 61. Okay, we get to fill. This stop has to come out a couple of ticks, which means that our first target is going to have to go out as well. And the rest of the targets, what we want to do is, hopefully we'll get there. I mean, this could easily just hold. But what I want to do on this is I'm just going to spread these out a little bit, and then we'll look at where they should really be lined up. So the main thing is that I get at least something near a 2-to-1 return on the front end of this trade. Otherwise, the trade is just not worth taking, right? I just cannot position myself into stuff that I'm not going to at least make twice as much as I'm putting at risk. So from 61 to 54, I'm at a 6-7 tick risk. So that means I need at least 14 out of this to make sense, right? So that puts me needing to trade up to 75 just to get to 2-to-1. That's a little bit tricky. So being able to reduce the risk at all would be helpful. Looks like this profile has changed just a little bit. So by bringing in my stop by 1, I can reduce this by 2. Right? So 55 to 61, that's a 6-tick stop, and then I've got a 12 ticks up is my first target. So let's see if that will play out. The next thing we want to do, and I'm kind of getting a little bit ahead of myself here because it's not like the trade is working. We'll see if buyers can come in and start lifting it up. And then what I want to do is start working out where these targets should actually be, rather than just randomly placing them all over the chart. See if we can get the buyers to come in and lift. So one way that, and I always tell people that if you're smart enough to be able to find a good trade entry, you're smart enough to be able to find solid targets. And obviously trading all the way across the range on a range-based day is your first, your primary target should be the other side of the range, or even beyond it, with the hope that the range gets broken. But in between there's going to be places where a lot of volume came in and transitions happened, and those are things that you need to be aware of. So for me, looking at this, I can see that earlier this morning, in the London session, we had this range. Then we poked out and made this high, which is where my main target is out here. Inside of that, I know that there were places where volume transitions took place as the sellers broke down back through this range, so in this area, and then obviously maybe a little bit deeper down, they had to get the momentum to penetrate this, and then here, that's more or less where our target is, right? So one thing I can do is I can go in and just take a look at where, for example, look at all this volume here. That's these three periods together, which was what was required to break back into London's range. All right, well, we have a nice distribution of volume right there, right? So I would imagine that this target that I've just randomly put at 82, I can actually take and put up here at 86, okay? Now I've got another target in between, so what I can do is go back up towards the high and see where that volume that broke back down off the top came in, and you can see the nice transition here. So anytime you're thinking about a target, you want to go and have it make sense. Don't just have a random target on the chart. Go up and have it make sense, both in terms of being some sort of multiple of your risk that's greater than 2, obviously, and also what are you going to be up against in terms of a roadblock, right? And that's what I call these things. It's just there's nothing to say that the market's going to stop here, but it certainly could, and so rather than put myself in a position where my target is a couple of ticks behind where it would stop if that roadblock was going to hold, I want to get in front of that. And in this case, that lines up with the edge of value as well. So let's just see if the buyers can come in. I mean, we may have just jumped ourselves into something that isn't going to be moving at all, given how slow the market is. But I think to trade back up to the other side of the small range and be able to pick up 2 to 1 makes sense. So we'll see if it'll come together for us. Okay, here come the buyers. They seem to be at least making a stab at getting back up to the high. And I'm going to zoom in on this a little bit so that you can really see the profile. The way that the volume has shifted, I can bring my stop in another tick. So now I'm just down to 5 ticks. So that gives me a little leeway on this. I'm at 12 ticks here. But if we come up and we just get really close to it, there's no reason why I can't, drop it in at 10. So it's always about your risk to reward. My initial risk was higher than what I'm taking, but I'm trying to get this first target sort of inside this transition up here. And so that's 10 ticks right there. There we go. Hit, but no fill. Come on. All right. So we're filled on the 2 to 1, which is just fantastic. So now the big question is, can we actually get up and out and take some of these other targets? And remember, all these targets have to make sense. It's not just some random nonsense on the chart. We're going in and we're actually learning where events took place. It's all event driven. So those prior events are going to be potential roadblocks for us, and we want to make sure that we're positioned correctly. All right, so everything seems to be moving up nicely here. What I want to do is I'm going to take my profile, I want to drop it down to the low. Now you can leave it there or drop it to the low. If it's turning into a swing, I generally want the volume just off the swing, not off the transition prior. And that's kind of where we are right now. And what that does is it allows me to use the volume weighted average price as my trailing stop. So look at this. Beautiful, beautiful. Okay, so we got that larger multiple, and I just got to get the stop up now behind the volume weighted average price. Right. Now this is where it gets tricky, because the question is, well, do I just continue to trail the volume weighted average price? as though it's some magical number, or do I start using things that make sense? Like this transition right here, you can see, let me zoom in on this. You can see in the profile, there is a little bump of volume here, and that's generated from these two periods right around here. That is the buyers transitioning through the prior selling effort, right? So if I just continue to use the VWAP, well, that's fine. It sort of makes sense as long as the bulk of volume is above the average, trading above the average price, then that makes sense to staying along. But if I've got feedback like this on the chart, geez, why not use it, right? Why not get on the edge of that? So here we go as we move up. We're coming into that 95, which from 61 is a hell of a good trade. And let's see if we can get that picked up. And then look here at this transition, right? Don't we want to get tucked behind where the volume started breaking? Now remember, this isn't just a random place on the chart that we struggled to get to. This is where we put our target. And why did we put our target there? So look at this transition here. That is exactly here where we're fighting to get through. And look, we're just missing our target by a tick here. So I want to get my stop up. There's no reason for me to have it all the way down here. I want to get it up behind this last transition of volume. What do I mean by transition? These are buyers. The sellers stopped the upward action. They started pushing back, and the buyers came back in and transitioned through that to continue the buying effort. This is just a beautiful trade on a nice early in the morning, not making me wait all damn day for a trade. So I'm really happy about this. So the sellers right now are creating some lag here, and let's see if we can punch through it. And the effort that we're trying to get through right now is here. See this? So we're ticking right up against this transition where the buyer turned into a seller, and then the seller engaged the market. There we go. All right. So with that, look at the distribution that we're up against now, and we can get on the other side of this and just keep following these transitions up, and hopefully we'll take out the 4703. And if not, what a hell of a trade, right? Trading from 46.61 with an initial stop of 7 ticks. We're at many multiples now. All right, so this is the transition that we're bouncing off of. So hopefully we can hold it, but if not, it's been a great trade. And hopefully we can pop up to get the 4703. Getting a nice little bounce off of 88. Let's see if they'll follow through with it. So I want you to reference this because it's here on the chart and that's what we're up against. But obviously the next one up is just above that. So if you think about what takes place when the buyers are buying up, the sellers have to come in and stop the buyers by putting enough depth that the buyers no longer are trying to drive through it. So that stops the upward action, but then you also need the sellers to come in and reverse. And so there's always going to be two key points on a reversal. And in this case, you have the transition all the way at the top where the sellers stop the upward action. Then you have the area just below that here where the sellers come in and really drive. And a lot of that has to do with buyers essentially giving up, right? Not every seller is a willing participant. And in this case, you have sellers that are really just selling out of a long, right? So that creates downside momentum when you start triggering after you've got buyers stuck at a high. So if you're stuck up here and the sellers start driving down, you're going to end up selling, not because you want to be short, but because you've got to throw in the towel on your long. So here we are trying to bust through. You can see the transition that we're trying to trade through, and then I'm going to clear this one so you can see the one at the top. So this is the secondary. This is where the momentum comes in, but this is the primary transition here all the way at the top. And look, oh, we hit it, but we're not filled. See if we can get there. Pop back up and fill it. Oh, come on. Hip and no fill. Hip and there we go. And that's that, guys. Crazy little trade off of the low. Remember, the whole idea here was taking the trade once we were past the point of control, because the point of control was giving us upside opportunity because it's so far down in the bottom of the range. So we were trying to trade the spread from the point of control up to the top of the range, and look at that, almost to the damn tick. Hopefully this makes a lot of sense, and you can see the value of OFA. It's not some magical system. It's a way for you to look at the chart and actually make sense out of what the hell's going on. And I would venture to say that of the bulk of novice retail traders that we work with, that's the biggest problem that you have, is that you've put your faith in some sort of indicator mathematical calculation, and you don't have any clue what is actually going on in the market. You don't understand that when we reach these very logical points on the chart, there's going to be a battle between buyer and seller. And if you can learn to figure that piece of the puzzle out, I mean, look at this. We just traded from the low exactly up to the top of the range and took profit at all the logical points along the way.
Well, that's section 6. Coming up next in section 7, let's talk about moving forward, what you can do to challenge yourself to move forward as a more successful trader with our groundbreaking weapons-grade technical analysis.